This is the first part of a series of videos that will walk you through running the broker pay sheet report and actually establishing a foundation, a baseline on your vendor accounts to be able to run this report on a regular basis and determine how much you need to process through payroll for any of your vendors for any given pay period. So we're going to start by showing you how to run the report. It's run from the CTS Web Reports widget, which you can add to your main dashboard, and it's called Broker Pay Sheet. There is currently only an all brokers version, and the various options you have on this report can be, to a large extent, predefined. So we'll go into how to set up pay periods here. You can also change the effective start and end dates if you need to, but they will be determined automatically by the pay period you select, for example. The location is going to default to the user's primary location. You can change it again if you have access to information from other locations. Then you can narrow it down even further by vendor type, a specific broker, and HR status if you only want to include active HR records. And you can also limit it to only vendors who have activity in this pay period that you've defined, or you can run it for all of your vendors, but most people don't do that. Once you've run it, you'll see a few different sections on the report. We'll just walk through them one by one. At the top is the name of the vendor account, not to be confused with the actual person's name. So sometimes vendor accounts have different names, and this report is going to give you a separate page for every vendor. So if any one of your contacts has more than one vendor account, you're going to see two separate reports for that contact. It gives you the name of the pay period you selected, if there was a name, and then the actual date range, and then of course today's date. Some details about the person at the top, and then some summary sections. So this very first section for the current pay period information is summarizing what's ultimately in this detail below by various categories. And it does the same thing for the entire year to date, and then it separates out from all of the different transactions, specifically draws. And we'll talk about how all of those amounts are totaled in a little while. First, I want to point out that all of these numbers on this report are actually driven by the account transactions associated with the vendor record. So account transactions can be managed any number of ways. They can be added manually. I'll actually start with Joe's vendor account. In some cases, actually in most cases, they're added automatically. So for example, Joe's vendor account has 242 account transactions associated with it. The vast majority of these are from payments that were applied to closed deals, and those will automatically always create a transaction that ultimately credits his vendor account or her vendor account with the net commission amount attributed in that payment to that person. It also automatically adds account transactions if there are any deductions as part of that payment. So the net commission amount is one transaction, and then if there are any net deductions, those are actually recorded as separate transactions. All of the transactions are recorded as credits or debits. So in the case of payments, they're always going to be a credit into the account, think of it as a deposit into a checking account. And net deductions will be credited if this person receives that net amount, or they will be debits if that person is paying somebody else that amount of money. You can also create manual account transactions either as an income record, which would increase the balance on this account, or as a debit record, which would decrease the amount on this account. And keeping in mind that CoStar brokerage applications is not a true general ledger system, This sort of mimics ledgers in a way, but it does not force you to balance at the end of the month or the year, which is how we'll show you how to manage that for payroll entries. So all of these account transactions that are associated with this person's account for the time frame of February 1st through February 15th are going to be listed here. And we separate them by commissions, which would be commission payments, commission net expense or net deductions, and then any other account transactions would be listed here as well. In his case, for this pay period, he's got 2 commission payments come in, get a net deduction for marketing expenses that debited a small amount out of his account, and then there was an expense reimbursement that was manually added as a transaction to his account to actually pay the house back for. Then it summarizes those amounts here at the top. So your commission net expenses are summarized commission payments, and that gives you your commission total. Then you might have any other account transactions, which by the way would include draws, and that gives you a subtotal. And then it basically gives you a gross payout, which is the net total of commissions, commission net deductions, and any other account transaction debits or credits from that time frame. You'll notice here that the starting and the ending balances are ridiculously high numbers. That is because this account has not been balanced, meaning as payroll is processed, there hasn't been any entry added into this account to reflect a debit out of the account because the broker has now actually been paid. Think of it as writing out a check to cash. So because there has never been any balancing effort on this account, all of the commissions have ultimately accumulated over the years. And so this is generally what you start out with. So we'll spend a little bit of time in a separate video going over how to set up the accounts and get ready so that you can use this report on an ongoing basis and then continue to balance it. So that is ultimately what this report summarizes. When an account looks clean, then the starting balance would be generally 0. You would have your activity for that pay period, and then it gives you the gross payout amount. And once you've processed payroll and added to the payroll transactions to each of the vendor accounts, your ending balance should again be 0. Depending on whether or not you would like that payroll transaction to be reflected on the last effective day of that pay period or the actual payroll date, another topic that we will be discussing when we go over how to actually process payroll.